Imagine turning $1,000 into $1 million. Warren Buffett did it, and here's a simple strategy.
I think it's the same thing that makes most sense practically all of the time, and that is to consistently buy an S&P 500 low-cost index fund.
So what's an index fund? If the most successful investor in the world is recommending it, I'm pretty sure it's something that's worth paying attention to. An index fund, put simply, is a basket where there are a bunch of companies inside it in varying amounts and percentages. Now, there could be an index fund for just about anything. Most notably, there is one known as the Standard & Poor's 500 Index. As Buffett mentioned, the S&P 500. The S&P 500 follows the top 500 largest companies in the United States. So, for example, if you put in $100 into an S&P 500 index fund, this fund would then automatically divide up that $100 into varying percentages that it's allocated to each of those 500 companies. And that's usually based on the market cap of those companies. With very little to pay in fees, it's a great way to diversify your money for very cheap. So imagine buying a share in each of those 500 companies. That would get you the same amount of exposure, but be very, very expensive. And that's just not something most people are able to do. So how do you select an index fund?
Yeah, I would say that in terms of the index fund, I would just take a very broad index. I would take the S&P 500 as long as I wasn't putting all my money in at one time. If I were going to put money into a index fund in relatively equal amounts over a 20 or 30 year period, I would pick a fund. And I know Vanguard has very low cost.
According to Warren Buffett, as long as you invest relatively equal amounts of money over a long enough period of time into a low cost S&P 500 index fund, it doesn't really matter which fund you select. Personally, I use VGS through Vanguard. It's got very low fees, 0.18% per annum. And unlike the S&P 500 index fund, it gives me exposure to over 1,300 international companies. Compare this to a managed fund, which usually charge 1% or more in fees. And as you can see, fees really compound over time, just like your gains. And they can take away tens of thousands or even millions of dollars away from you, depending on how much you're investing. So when do you buy?
Keep buying it through thick and thin, and especially through thin, because the temptation gets, when you see bad headlines in newspapers, maybe to say, well, maybe I should skip a year or something. Just keep buying it.
Now, as Warren Buffett mentions, there's no better time to buy the S&P 500 than yesterday, and the second best time to buy is right now. This is a great way to make your money productive and get it to work for you instead of against you, like it does with most people. And as I've said before, there's not a way to get rich, but it's a way to compound and grow your money over time. And we've done these calculations before. Consistently investing regular amounts over a long enough period of time generates so much in returns that you'd never have thought it was possible. So ignore the news and just keep buying. So when do you sell? Well, the short answer is never. And the long answer is maybe not for a long time. As I've mentioned before, there's not a way to get rich quick. So selling, although it depends on personal circumstances, is not for a long time after you begin investing. As investing in low-cost index funds regularly for a long period of time is the best way to get compounding inflation working for you. The way most people in the know use this is that they invest for long periods of time consistently, no matter the current news that's about to hit and drop your investment value by over 50%. We've all seen and heard these gurus on the news saying that markets are going to drop next year and the year after and the year after, but there's never been a time in history for the past 100, 200 years where the market's tanked but never recovered. So what are the chances that's going to happen in the future? Not very likely. So just block and ignore all of them and just continue on with your investing journey. So how do you actually use the money that you're accumulating? Well, this is a very interesting topic, and it's a strategy that most rich people use, but we'll have a deep dive into it into the next video. So I hope you've understood what we've covered today and found it was something interesting and something you didn't know before. And I hope that you can use this information to begin investing and compounding your wealth over time. Please leave us a like, comment, share, and subscribe. Comment down your favorite index fund if you already have one or if you're looking into one. Please share this with your friends so they can get rich with you and you're not alone. And I'll see you in the next video.